In this episode of Industries at Work COVID-19 edition, the Council's Membership Development Director, Ken Houtenhoff, talks with Kevin Clary, Vice President of Risk Management and Premium Audit at Amerisure. Focusing on manufacturing, they cover the effects of COVID-19 on everything from the global supply chain and changing regulations to operating safely and risk management, to claims activity in major lines and carrier capacity and appetite. Take a listen.
Let's just jump right into it. In a broad perspective, how do you see COVID-19 impacting the manufacturing industry, and maybe more specifically some of those individual lines of general liability, workers' compensation, D&O, and business owners' risk? How are they all being impacted?
I think the impact of manufacturing is going to be extreme, and the longer this goes without a treatment or vaccine, the more severe it's going to get. So with the question of what does this mean for coverage, I think if we look at each one individually, we'll start with comp, because comp's usually the big mover, right? And I think the impact of comp's going to be tough. Some states aren't going to support comp coverage, so there isn't a potential impact to the loss ratio. But what's more likely to happen, I believe, is significant reductions in sales and payrolls in the comp market, which in turn, this is going to drive premiums down. I mean, we're already projecting about a 15% decrease in premiums as a result of exposure and work in 2020. And if this continues, it could get worse. This reduction in premium has impacts on individual risk performance, which could impact rates. To manage their book. One of the probably worst case scenarios I think could happen right now for the consumer policyholder is that you're probably going to see if you see a significant market hardening, which I believe is likely. Not only does a policyholder or manufacturer have to balance safety, which comes at a cost, decrease in sales and possible shutdowns, reduced shifts, and their costs are going up, while at the same time in the insurance market may harden. So what you may have in the comp market is it's kind of a competing priorities, right? You have increased costs, lower sales, and you may have a hardening in the market, which possibly could put your manufacturers in just a tougher operating stage. Worker comp, and we believe that worker comp will be at the forefront of that. It's going to be really the leading line and the impact on COVID and manufacturing. When you talk about general liability, we think unlikely that CGL will be impacted at the premises level. Companies are starting to take action. They're starting to understand the exposure, liability standpoint, outside sources coming in. So we feel in terms of the industry and manufacturing, CGL probably not as much of a problem on the premises liability, just because the virus, we're learning more. It doesn't live long enough, we believe, on services, and true contamination issues seem less besides direct exposure. Where we think you're probably going to see challenges with the CGL is on the premium reductions and exposure bases. And again, as sales are decreasing on the product side, we feel that really probably the key area there is going to be quality. We've embraced globalization in manufacturing, right? So as this pandemic sweeps the world, what happens now to that global supply chain? Does the quality of materials get impacted? What are our manufacturers doing on our end? I mean, we know they're going through quality control processes today, but we feel that the quality chain will be challenged more due to the supply chain inconsistencies as a result of the virus. So, bottom line on CGL is premises, we feel probably not a big impact. Product, we worry about the back end of that on the product liability end of just the supply chain and the consistency of the quality of that supply chain under the globalization in other countries, that type of thing. Will it bring more back to the United States? We don't know, but that could be a strong possibility in the issues that are faced today with globalization.
What's really unique to manufacturing is the reliance on the supply chain and the globalization of that supply chain. And then you're going to have to start thinking about things like trade credit insurance and reduced capacity for that, and how accounts receivables are impacted, and how the whole process might have to be looked at. What other unique risks would you say are affecting manufacturing specifically compared to the other verticals that you're looking at?
No, absolutely, and that's a great question. In Amerisure, we insure many different types of industries, but our target markets are manufacturing, construction, and healthcare. So that's the core of kind of what I compare things to. Obviously, you write other industries, but manufacturing, like you said, it has some commonalities, but it's also unique in multiple locations. Different state regulations where, before you always had to worry about state regulations, but certainly now in this COVID stage, they're changing dramatically from day to day, week to week, right? And so you really have to keep up on that if you have multiple plant locations and really address each one individually. But more importantly, probably with manufacturing is enclosed spaces, and that's the real challenge. Construction obviously outside a lot more. Healthcare, it's much more controlled and smaller groupings and things. But in manufacturing, you have your building, right? You have the close proximity, and that's really, I would say, the most unique thing for manufacturing compared to the others, because you have no alternative. You have to operate in a closed location with multiple people, and we're learning, right, that's really the highest risk exposure there is to spread COVID, as far as as we know today from the information. So it produces really the highest risk situation.
I mean, putting a lot of people on an assembly line floor in one building with one central air system, I think that's probably the last place a lot of people should be during the pandemic. So yeah, I totally agree with that.
Yeah, and absolutely. I mean, and now, the advantage of that, you do have some things you can do, right? So now with an enclosed building, interior operations, you can look at your filter system building, go to a higher filtration. Obviously, all costs money, but you do have, obviously there is some controls and options that you have out there, but it is certainly a huge challenge, and why I recommend to any agent, any clients of the agents, policyholders, that they engage the risk management, loss control departments of their insurance carriers, because they can offer them a lot of assistance in this in terms of what they're planning and what they plan to do, and then offer recommendations and those types of things. So I think that's really important also to reach out, the agents, brokers, reaching out to the carriers and partnering with them to help out their policyholders, I think is a real key part of this also.
Yeah. And are you seeing a lot of your manufacturing clients actually closing down during this period, or are they falling into that essential business category and just finding ways to operate throughout everything that's going on?
Yeah, I would say by and large, for our experience at Amerisure, has been they've been continuing to operate at a very decreased level, right? Not as many people on the shift, social distancing in place. But I would, and I'm estimating, I would probably say at about 40% at the most capacity. And, it really depends on the state. In the South, Florida, Texas, Arizona, which we have a lot of business, it really hasn't stopped at all. They have pretty much been maintaining the same frequency, at least in our experience, where in the North, it has been a little more start and stop, I guess is a better way to say it. But right now, pretty much they're all up and running, but at limited capacity in our experience with our policyholder set.
That seems to make sense with what I'm seeing on the news every day. Yeah. So what kind of claims are you seeing? Have there been any lines that have had a noticeable increase or decrease in volume?
Yeah, I mean, that's a great question, a question I get all the time. And, I'll address it by the major lines we service, which are really the major lines: comp, auto, liability, and property. In workers' comp, traditional workers' comp claims for us have decreased. Of course, we've had an increase in COVID-related claims because we never had COVID-related claims before.
Right. Yeah. Right.
But 90% of our claims that we're receiving under comp are healthcare related, and healthcare is only about 10% of our total business. So, so what's that mean? It means that healthcare is the hot spot. The exposure is everywhere, obviously, but in terms of just claims, it is 90% of what we've seen in claims is healthcare related, and that'd be like nursing homes, hospitals, those types of things. But traditional COVID claims in comp for manufacturing, they've been minimal for us, very minimal. We have gotten a lot of notice only. They think they have COVID, then they test it, and it's not. So we get a lot of that. But generally in comp manufacturing, we have not felt a big increase. We don't do a lot of Main Street retail business in comp, where obviously that would have been hit harder. And so we don't feel that. So I don't have the knowledge on that part of it. I know it's higher in those areas, but for us, in my knowledge, it has not been an issue in manufacturing.
Okay.
In auto, interesting, because I think everybody in the industry, none of us were excited about the pandemic, but one of the benefits we thought was maybe some relief in auto loss ratio, right? Because less cars on the road. Well, what we're seeing and the industry seeing is the frequency down, obviously, but severity is up.
Right.
And so severity has been an issue, as we all know, in auto, for the last numerous years, just the increasing severity with auto accidents. And what we know now, because we've been in the pandemic long enough, is that there's less drivers, and we all know that, but they are going a lot faster. And so the lift in terms of claims, there's less, but we are seeing very severe claims from what we've seen before in our auto accidents in our commercial business. And then the other part is I just saw in the industry yesterday that the largest tracker of miles, telematics, they do 1 billion miles every other day tracking, is we are almost back, based on their research and their data, to pre-COVID levels on auto, meaning so we're not far back to getting back to normal in terms of autos on the road, type thing. But bottom line, frequency's down, severity's up because of the speed.
It's interesting that we're all really learning how much of a safety measure traffic is in a day-to-day basis. We all sit there and we are upset we're stuck in traffic, but now we can actually look at this data and see how many lives have potentially been saved by bad traffic lanes.
I know, yes, it's a double-edged sword, right? But you're absolutely right. I mean, you go down the freeway today, it's gotten better the last 60 days in Michigan, but 90 days ago in Michigan, they were bare. I mean, you could drive through rush hour times and there was practically no one on the road, So, and the industry will tell you also that the police officers, the enforcement is not as high because they're trying to avoid personal contact as well. So unless it's real severe incident, not enforcing the road laws as much either in terms of that's the feedback we get from the industry. So
yeah, and I'm really interested to hear that things are getting back to their pre-COVID levels. Driving around now, I just wonder where everyone's going in a pandemic, but everyone's got somewhere to be, I guess, and it's at that level that we were before. So I think that's a good barometer as to public perception of the situation overall.
No, I believe you're absolutely right. Absolutely. And so kind of that consumer confidence, right? Concept it's coming back to the country, right?
Yeah.
And people feel a little bit more confident. We understand the virus a little bit more. And so I think that confidence is gaining, which is a good thing for the economy, and I think for our agents and our policyholders.
Well, I know there was a couple other lines there that you mentioned that you were looking at, but I want to go back to those COVID-related claims that you were mentioning in comp. When it comes to someone that is filing, is there anything that's unique to COVID-19 in terms of proper documentation or financials or records that a business, one of your clients, should be thinking about before they file that COVID-19 related claim?
Yeah, absolutely. So, if they're filing a comp claim, and I'll just say no matter the line of coverage, really, we'll talk a little bit, obviously, about non-comp, but, obviously, detail is the king. As much detail regarding the exposure is critical. I mean, making sure you're keeping documentation related to furloughed workers as well. So a little bit different there is, and why I throw this in here, because I think it's real important, Ken, is so you have a COVID claim, and that's what we're talking about. I believe you follow the regular procedures if you would follow a claim. You contact your agent if that's what you typically do, or broker, and you utilize the process that the carrier and the agency has laid out. And that's will cover you in comp. The other part, while we're just talking about documentation, though, is I wanted to talk a little bit because it's come up a lot, and it's how do you handle furloughed workers, right? So, and I'll just use the example of a manufacturing facility, right? The pandemic hits. You're now going down to, you're gonna release 40% of your workforce. Worst, terrible scenario. We don't want it to happen, but that's the analogy, right? You don't want to release them. You want to furlough them because you just don't have work now. Because now this was obviously prevalent probably 2 months ago, but it's still out there. And you want to retain those employees, and so you're laying off 40% or furloughing 40% of your workforce. Do I have to, as a policyholder, pay the exposure on that? And the way we've addressed that as a company is what we've said is document your furloughed workers, dates they went out, dates they're coming back, and then make sure that you include that as well in the documentation to your broker and carrier, so that they can adjust any exposure decreases on that, which in this time, I believe, with the pressures of sales and all that, is a real advantage for a broker and a policyholder if they can document that well, and then show that to the carrier. I know with Amerisure, we will obviously audit that and adjust based on the reduced exposures of the workforce. So I kind of threw that one in there, sorry, but you're talking about documentation. I thought that was important as kind of part of this to say that. But I will say again, with COVID and workers' comp, you should file as you usually do a workers' comp claim. If you're 50%, should I or should not? I always say, and we always say, file the claim, notice only, whatever it may be, to get that recorded and with your carrier.
Well, I'm sure there's a lot of businesses out there that are furloughing workers for the first time. Typically, if you don't have the work, then you're going to be laying off individuals. But we all know, I guess we're all crossing our fingers that this is more of a temporary situation than not. And so it's putting those manufacturing owners and operators into uncharted territory. So I think that's really good advice you gave on the furloughed worker situation.
Yeah, and the bottom line is document, right? And if you do that, when your premium audit team comes in from Amerisure or your carrier, you're just going to be in a lot better position to hopefully get those exposure reductions.
Now, do you see COVID-19 impacting the capacity and appetite of carriers that specialize in manufacturing?
Yeah, I think the short answer to that, Ken, is yes. It's likely going to be capacity and likely controls. The question, right, is how long? Will this become permanent, or is this an aberration? If it continues with limited control and no viable vaccine in sight, I think you have to look at it really two ways. One is smaller carriers. Your smaller carriers, they may not be able to adequately accept or cover for risk. Say if you had 500 plus employees in a plant at a given time, that type of exposure just may be too significant for them to take it on. So then what are they going to do? They'll go behind the scenes. They'll get reinsurance, right? Which typically will drive up costs, right? If you have to go to a reinsurance contract as a layer, for these more regional type companies. The carriers are under intense pressure to accept communicable disease exclusions in our most recent rounds of our reinsurance negotiations. If these contracts that provide smaller insurers, provide regional insurers the capacity that they need to write, those larger risks in that kind of 500 plus worker scenario with a single location, that could become a significant challenge for those regional carriers. Then when you talk about like a national carrier level, company, it's different, but it's similar, right? They don't have to probably worry as much about the 500 workers in the plant. They have to worry about the 50 risks that they write in a state that maybe has 50,000 employees, right, at an aggregate level. So they still have to address that exposure, whether you're kind of a regional carrier or you're a national large carrier. It's just two different ways to look at it, right? The smaller guy carrier is looking more at an individual risk location. A national carrier is going to look at more what they have as an aggregate. And so, so they're going to have to look at reinsurance as well at an aggregate level. And anytime that happens, right, it's going to drive up costs and it'll decrease capacity. So, long answer to a short question is, we do feel it will impact capacity and appetite, depending, again, like I said at the beginning, on the duration of this pandemic. I think you also have to think about in that arena in terms of coverages and lines as business income, right?
Right.
So,
yep.
And, if there's any success, to sufficiently change the coverage triggers on policies where a virus is now considered compensable, which we have seen in some states. In Michigan, we've seen it with healthcare workers, right? Before the pandemic started. So take, for example, a shutdown. What happens if is a shutdown once? Has the pandemic stopped and now we've shut down and opened back up? And now Are we coming back? Is it a one occurrence? Is it two occurrences? These are all things that the industry is kind of figure out on the go right now, type of thing. So it just adds a lot of confusion, specifically in the business income structure. The ranging straight structure, potentially actuarial rates are going to change. Yep. And so what you'll probably start seeing on the business income side is a lot of product updates, a lot of coverage type updates that we feel is going to probably trickle through fourth quarter, quarter one, 2021.
Q1 2021. Yeah, I mean, I think you've touched on a lot there, and a lot of it is just the confusion and the ambiguity around when is this going to end and what is the response going to be from a national and a state level until it ends. And as you said, it's constantly been changing. I know it's different from Michigan to Illinois to Ohio to Indiana. Mm-hmm. So there's a lot that will change between now and when this is over. It's got to make it a difficult thing to stay on top of and then to advise to your clients.
Yeah, absolutely. And that's the unique situation, right? We're always in the pace of change, right, is extreme in our world, the last 10 years, right, with technology booming. But this is just, right, something we've never faced before as an industry, and as the manufacturing segment. And so, you hate to say it, but we're really figuring this thing out on the fly as we're going through it because we have no other alternative at this point.
So I think my next two questions I'm really going to condense into one because it sounds like most of your manufacturing clients really didn't shut down fully. So there isn't really a reopening as much as there is scaling back up. But when you're talking to these businesses and Amerisure is advising them on risk management practices that they need to have when they're ramping back up, or if they've been deemed essential and they never really changed, what is that advice that you're giving them so that they can stay operating in a safe way for their employees?
I will tell you now, there is some really good resources out there. We have a very comprehensive back-to-work plan for all industries, manufacturing also specifically on Amerisure.com. So anybody has access to that and can access that, like I said, on Amerisure.com. The other real key area that I've been monitoring and have contact with is trade associations, manufacturing associations. They're really now starting to provide some good resource on specific industry, and obviously manufacturing one of them. So if you have a local or a state manufacturing association, national manufacturing associations, industry specific within manufacturing verticals, what I'm seeing is they have some really good resources specific to your type of manufacturing that really help. Our plan, much like a lot of them out there right now, address all the key areas, everything from bringing employees back to vendor management, vendors on site, really covers everything. To give you an idea and why I can't kind of give you the whole, give you the whole recipe here is our plan has, I want to say, 22 different sections in it. Now, you may not have to utilize that plan, all 22 sections, but what we've tried to do is really provide that resource to a manufacturing customer facility that they can take and choose what they need based on their operations. But the key, obviously, is following your state guidelines. And we're all pretty much in it now where social distancing, no matter what state you're in, you are going to have to solve that issue. And that's probably one of the biggest key areas. And with your production lines and different things like that. I mean, that is a major operation for a manufacturer to do. But there is tons of great resource out there today. And that's what I recommend, like I said, because it's so comprehensive and there's so many things that you have to think about, that you have to rely on your carrier partners, your brokers, your agents as a manufacturer to help you get through this and make sure all your bases are covered in terms of risk and exposure.
Yeah, now seems like certainly an opportune time to remind all of our clients that we're not just here as in the insurance industry to help you out when things go terribly wrong. We're also here to help provide guidance and advice and value to you to prevent those situations. So your back to work plan, working with different trade associations is a very proactive approach to doing just that.
Yeah, absolutely. I mean, you said that very well. I look at this as for our broker partners, our agent partners, for the carriers. This is our opportunity, right? This is our opportunity to really show the manufacturing segment the resources we have, and that we're not just a backstop when an accident happens, but we do have we can help you, be safe. Help you run your operation the most efficient and best way you can as a policyholder and as a client. And so, yeah, I think it's like anything, right? Bad things do give you opportunities, and as an industry, I think we have tons of resources. We have our intentions are good, right? Loss reduction prevents loss, right. And we can really take advantage of this situation and really be there to help out the businesses.
One of the more interesting stories that I heard of throughout this related to manufacturing is those manufacturers that saw that the item that they were producing wasn't going to be in demand, or they thought that they could contribute to helping be part of the solution to the pandemic. And specifically here in Maryland, where I'm talking to you from, we had one tequila distiller that retooled their assembly line to make hand sanitizer. I didn't know we made tequila in Maryland. That's something new to me. But I could imagine that the operator of that plant is thinking, we're only making slight changes to the production line. Let's just go ahead and do that. I'm sure the insurance guys will be okay with that. But I'm thinking from our standpoint, there are probably some questions and conversations that a plant owner should have with their broker or their insurer before shifting production like that. Is that correct?
Yeah, absolutely. And we've had a few of these situations in our manufacturing book here at Amerisure. And so, I'll give you kind of how we've approached it, as an insurance company. My guidance would always be get with your agents and your carrier involved in the early discussions, okay? So that the policyholder can see the impact of any things that they're going to change. Because really, at the end of the day, and you use the hand sanitizer example, and we've had several manufacturers switch to hand sanitation in various in various states. So it's really what's the change in the operation. So now bringing in and I'm making it up, combustible, flammable liquids into the operation. So what you really need to do is be upfront with your agent and carrier and getting them involved so that they understand the changes to the current operation. And once they have a good feeling for that, then they're going to help you. I mean, I can speak for Amerisure. I can't speak for other carriers, but the conversations that we have are that we want to be as receptive as possible as a company to these operational changes. Because what they're doing by and large is good for society, right? We're in the middle of a pandemic. So the way we're approaching it as a carrier is get us involved early. Let's understand the differences and if it increases in exposure, decreases in exposure, and let's help and work to figure it out together so that you can move forward as a manufacturer. And we look at that as it's probably good. In the current situation, and we want to do everything we can to help facilitate that manufacturer. And so bottom line, get the carrier, get your agent broker involved early, and I think it'll be a much smoother process. And you can utilize, the manufacturer can utilize those resources as well to help design that, design the space as well if they're changing the production line, those different things. But my experience with Amerisure and within the industry is carriers have been very receptive to working with a policyholder or manufacturer to adjust the process and keep moving without skipping a beat.
I think if all the plant operators and the owners within the manufacturing sector do everything that we advise here, talk to their broker, consult with the carrier, use the resource centers that everyone has provided in terms of how to mitigate risk. There's going to be a lot of learning going on from these clients. They're going to come up with a lot of new questions to ask related to their insurance. They're just going to understand, I think, what their insurance brokers and carriers can do for them that they may have not realized in the past. Do you see a change in the way that this industry buys insurance and what type of coverage they're going to be considering in the future post-pandemic, or maybe even as we go through, the remainder of the pandemic?
Right. No, it's a great question. And we believe it's going to change, right? And the $1 billion question is how, right?
Yeah, right.
The belief, right. The belief is, and we believe ultimately it's going to get we believe ultimately it's going to get back to a sense of normality, right? We hope and we pray, right? And Congress, is going to institute something, we believe, like they did with terrorism, right? There's going to be a pandemic, we hope, and there's discussions now about a pandemic backstop like TRIA, right? Unfortunately, this will probably be inadequate for insurers to truly, to protect themselves. So they're going to have additional reinsurance, driving up costs, right? Or we will only offer small sublimits per policy basis, right? So you may only get $50,000 coverage in a specific year for, pandemic-related exposure. We're seeing some of the E&S carriers may come to the table and offer broader pandemic-type offerings, and these can already be purchased through like a Lloyd's today. But there's and actually I was going to mention also, there's a great article actually out right now, and if anybody wanted to do a little research, they could look up on Wimbledon, actually, the golf tournament, and how they got coverage for the pandemic. And it's just a very good case study for our brokers and agents out there listening if they're interested enough to look it up. But it's the Wimbledon pandemic cover if they want to look it up. But it does give you some good insight on how it was handled over there and kind of the changes in that coverage over in Europe. Now, we haven't seen that here yet, obviously, but it gives you a little bit, of insight. You'll probably see, obviously, a little bit more expensive disease-specific policies rather than like broad pandemic policies would be our guess also. As you start to look at really how's the pandemic shaping coverage, shaping how policy holders buy it. And you said earlier, best, Ken, I think the brokers, the agents, the manufacturers, and the carriers are going to be asking a lot different questions moving forward, right? Where this wasn't even a consideration 6 months ago. You're going to have, we believe, a lot more specialty type coverages, for in the market as we move forward for pandemic type response or coverage.
I think you're right. I think we'll be seeing a lot of inquiries about, pandemic coverage in general. People don't want to see this happen again, but it's, does the chicken come before the egg or vice versa?
Right.
The appetite for the carriers may not be there unless something like a TRIA solution is figured out so that they feel more comfortable taking on that extra risk.
Yeah, absolutely. And I mean, that's, and this pandemic adds a little, fuel to that fire, meaning things are changing so fast, right? And even within states and governments. And, as I alluded to earlier, how in Michigan, the governor ordered us to pay workers' compensation on healthcare workers. I'm not saying that's right or wrong, right? But what I'm saying is we didn't plan for that. We didn't price for that, right?
Right.
So why I think it's good, it's just from a carrier side, you just didn't prepare for that kind of exposure and or payout. So that uncertainty, I think, is going to drive a lot of what's going to happen in the future, right? And also, there'll be some feel, right? You may see some specific coverage in this area. I guess, lack of a better way to say, a testing of the market for different types of coverage.
I think that makes sense. An incremental approach just to figure that out. Well, hopefully, Kevin, as you said, we'll get back to the sense of normalcy here before long. We'll see. But that's all my questions that I have for you today. I thank you for speaking with me and for sharing your insight to the broader CIAB community. I think there's a lot here that can reaffirm what our members know and possibly some new insight, some new questions and answers for them to think about. So, Kevin, thank you again for being here today.
That was the Council's Ken Haltenhoff talking with Kevin Clary, Vice President of Risk Management and Premium Audit at Amerisure, about ongoing manufacturing activity. Thanks for listening, and don't forget to check out the rest of our Industries at Work COVID-19 edition podcast series.